Welcome back to Stock Trader School, from Rookie to Rainmaker, and this is Wednesday Wall Street Walkthrough. Let's go! Hey, if you like financial content that gets straight to the point, consider following along for more updates. Today, we're going to walk through Wall Street. We lines be looking at real-time order flow and the markets to find out what smart money institutions are doing with their trades. Before we get into it, here is a quick disclaimer. This is not financial advice, and everything that is said in this video is for educational and entertainment purposes only. And now let's get into it. Alright, so before we talk about what dark pools are, who uses them, and why you should care, let's start by answering, what is a dark pool? So a dark pool is basically a private exchange where institutions can trade massive volumes without publicly showing anyone their hand. If you think about a regular stock market exchange, there's something called the public tape, which shows all trades that take place within a given security. With dark pools, however, these trades happen outside the public tape, or all I can say is off the grid. Here's an example. Take a look at this chart of Nvidia. In the top window, we have the regular stock market exchange, also known as the lit book or the visible book. And in the bottom window, we have the dark pool. Now assume that right now the stock is trading at $100 per share on the public tape. Then someone places a buy order for 1,000 shares of Nvidia in the dark pool at $99.50 per share. Now the stock does immediately jump down from $100 to $99.50 because that would make way too much price movement. Instead, the dark pool matches up that buy order with sell orders until it fills up completely. The sellers might be unaware of what's happening because it's not visible to them. They just see a beer at $99.50, which is higher than the current price of $100. And when the order fills, the stock will actually increase to $100.20. So even though a massive buy order was placed in the dark pool, the public tape doesn't show it until the order fills. So then you may be asking yourself, but why do they do this? Well, several reasons. But the main reason is so that they don't scare away counterparties or impact the price of the stock. Imagine you're an institutional investor managing billions of dollars and you want to purchase 1 million shares of Apple. If you submit that order to the public tape, the price is going to jump. And then people may ask themselves, hey, why did the price jump? Was it worth it? If the answer is no, then people will rush to sell their Apple shares and the stock price falls. So instead, institutions use dark pools to avoid scaring away counterparties and moving the price. Another reason is anonymity. You may have seen the phrase by the rumor, sell the news. Basically, if everyone knows that you're buying a stock, then the price is going to jump. So by trading in the dark pool, you can buy a stock at a cheaper price before word gets out to the public. Okay, so now that we know what a dark pool is, let's talk about who uses it. As we mentioned earlier, institutions use dark pools to buy and sell stocks without affecting the price. Some of these institutions include hedge funds, mutual funds, pension managers, market makers, broker-dealers, and high-frequency traders. Hedge funds are known to use dark pools because they frequently trade large blocks of stocks, and they often do so in highly liquid markets where prices can quickly react to changes in supply and demand. Mutual funds, on the other hand, use dark pools for passive management of index funds and ETFs. Pension managers, meanwhile, use them for long-term investments with little need for liquidity. Market makers and broker-dealers also use dark pools to improve liquidity and execution quality for their clients. High-frequency traders, on the other hand, use them to front-run and to pump and dump stocks. So now that we know who uses them, let's talk about why retail should care. First, dark pool prints can hint at big moves before they hit the public markets. This means that if a huge buy order hits the dark pool, there's likely going to be a lot more buying activity soon. Same goes for sell orders. Just because a stock isn't trading at its fair value right now doesn't mean that it won't in the future. That's why it's important to keep an eye on dark pool activity. Just because a stock is trading at a lower price today doesn't mean that it won't increase tomorrow. Second, dark pools can tell us about overall market sentiment. By tracking which stocks are being bought and sold in the dark pool, we can get a sense of whether institutions are bullish or bearish on a particular industry or sector. For example, if a lot of technology stocks are being bought in the dark pool, it suggests that institutions are optimistic about the tech sector. On the other hand, if they're selling tech stocks, it means that they're starting to get bearish on the sector. And that's why you should care as a retail trader, because you can use this information to inform your own investment decisions. It's always smart to follow the smart money because remember, they have a lot more resources than you and me. Third, dark pools can show us which stocks are the most liquid. A stock's liquidity refers to how easily it can be bought and sold without affecting its price. And this is another good thing to know as a retail trader, because if you're interested in buying a stock, you'll want to make sure that there's enough liquidity to fill your order. If a stock has low liquidity, it means that there aren't many buyers interested in purchasing the stock. And if you try to buy it, you'll be stuck paying a higher price than you intended. Fourth, dark pools can help us spot potential short squeezes. Short selling is when a trader borrows a stock from a broker, sells it on the open market, and then buys it back later to return to the broker. When short sellers cover their positions, it can cause a sharp increase in the stock price, known as a short squeeze. This can be caused by an unexpected surge in buying volume, which is why it's important to monitor dark pool activity for signs of a potential short squeeze. If you see a sudden increase in buy orders, it could indicate that shorts are about to be squeezed out of the market. And lastly, fifth, dark pools can help us identify stocks with high short interest. Short interest refers to the number of shares that have been sold short. And this is another piece of information that can be helpful for retail traders. If a stock has high short interest, it could be vulnerable to a short squeeze if buying volume increases. That's why it's important to keep track of dark pool activity for stocks with high short interest. Now it's time to wrap things up. There's obviously a lot more to dark pools than what can be covered in a single video. Now here's a quick review of what we learned. Dark pools are private exchanges where big institutions buy and sell millions of shares every day. They use dark pools to avoid impacting the price of a stock and to protect their anonymity when buying or selling large blocks of stock. You as a retail investor should care about dark pools because they can provide valuable insights into the market. You can use dark pool data to get ahead of big institutional orders, gauge overall market sentiment, find the most liquid stocks, and spot potential short squeezes. If you found this video helpful, please make sure to hit the like button and subscribe to our channel. Thanks for watching, and we'll see you next time.